GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we break down crypto like a guy bluffing you confidently in poker with nothing but vibes. I'm your host, Jay Hamilton. It's Wednesday, March 26th, and we are live. So if you're here on Twitter or on YouTube, ask your questions and we will answer them at the end. Now, there's a few questions that I'm getting a lot right now. One is, have we bottomed and where are we going from here? And the other is, will the US and China and Europe and Japan and other leading economies print money this year? Are we still going to see the liquidity surge from the macro side? To answer these questions and so much more, we're joined today by Haseeb, managing partner at Dragonfly. Now, if you don't know Haseeb, you got to follow him on Twitter. This guy's got some of the best takes, but he also has an incredible story, which I'm going to tell really quickly. At 16, he started playing poker with $50. At 19, he had turned that into $1 million, and he was a professional poker player on tour. He then donated most of this money to charity and decided to give up poker. He went into coding. He worked at Airbnb. He's written a best-selling book. And now he is at Dragonfly Capital, where he is investing full-time in blockchain, AI, and the future of technology. Before I invite Haseeb up on stage, if you guys are trading throughout this market, which I know you guys are, you guys want to use Milk Road Swap. This is our DEX where you can swap Ethereum, Base, ARB, and Solana on all those chains with some of the best rates in the space, only 15 bips on ETH. So check it out if you are making swaps. Today's episode is brought to you by Definitive, advanced trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Haseeb, welcome to the Milk Road Show.
Thanks for having me, Jay. Appreciate the overly generous introduction.
You are a fascinating individual. So I had to share a little bit of the story. Okay, first question that I have to ask right now is, where are we in this cycle? We've talked a lot about, are we in a bull market? Are we in a bear market? Where are we heading next? Have we bottomed? What's your take?
So what's clear right now is that crypto goes through periods where it's very, very highly correlated to external markets, and then other times where it decorrelates and kind of does its own thing based on endogenous factors. Right now, we are in a period of very high correlation with traditional markets. So you see whatever the NASDAQ is doing is whatever's crypto doing. That includes Bitcoin. There are times when Bitcoin untethers from the broader market. This is not one of those times. So there's so much macro overlay over everything going on that basically predicting what's going to happen in crypto is essentially predicting what's going to happen in macro. So to the extent that you have a view on macro, which at this point you kind of have to, given how crazy everything is and how volatile the entire space has been, it's very difficult to predict macro on any kind of sort of clean time horizon. You can make a longer term prediction, I think, reasonably well, but over the short to medium term, so much is dependent on what Trump is basically going to do on trade policy and then, of course, on foreign policy. And that seems to be mostly what's causing markets to gyrate the way that it is.
Mm-hmm. Okay, let me just ask you the direct question of, do you think we have bottomed in our pricing, or do you think, and let's just talk about Bitcoin because it's easier than, I don't need to talk about or you could talk about the NASDAQ too, or S&P 500 if you would prefer that, because that correlation makes sense.
Sure. So the question of whether we bottomed is essentially the same thing as, do you think we're going to go into stagflation? Because if we're going into stagflation, then more pain is coming and things are going to get a lot worse from here. If we get an ordinary recession, then I think it's very likely what you're going to see is that the Fed cuts rates and at an accelerated pace, or they begin QE. And if the Fed does that, it's actually likely to stimulate risk assets, even though it's going to be very bad for the real economy. And so I think crypto is likely to benefit, even if the real economy is going to do poorly. Then on the other side, you've got like really kind of weird cases where, what if Trump, I mean, again, nobody's contemplating this kind of thing right now, but what if Trump basically decides, hey, we are going to go to war with Russia, or just some crazy shit that just Trump decides to do? That's going to be really bad for everything. So I think there's, if you take like a total geopolitical shock, then I think it's very likely that we're going to get a new bottom and that, we're not really there yet. I think on the macro side, for the most part, it seems like markets are, starting to get adapted to this new picture of what a post-Trump trade policy world is going to look like. And I think that's giving markets more confidence. Second, I think it's also true that Trump is moderating a bit. Before he was speaking very brazenly about, Doge is going to just totally take a chainsaw to the federal government and just wildly cut things. That has really moderated. Now we're seeing things come at a much slower pace than what they were doing in the first month. You see the same thing on trade policy, is that Trump has now moderated the number of countries with which they're going to do reciprocal tariffs. There's every single one of these tariffs he's pulled back on. And again, not gone all the way to what he threatened to do. And instead, you can see, okay, he's listening to the stock market. He's not listening to the stock market to the extent he did in the first term, but he still cares. And you can see he's getting rewarded by showing more and more moderation. And I think he's likely to lean into that. And that the more the market rewards him, the more he's going to continue going in this direction. So my base case probably is that we've bottomed. I don't think things are going to move very quickly through Q2 and Q3. I think it's pretty clear that Trump has a limited period of time through which he can do some of this crazy disruptive stuff that he's doing with respect to upending trade policy and upending some foreign policy. But once you go to like Q4, that's when, okay, now you really got a line of sight to the midterms, and voters are going to be much more punishing, right? Trump has already got the border under control. He's already got the fentanyl stuff on lock, right, with all the concessions he's gotten out of Mexico and Canada. So if you keep going, and you keep torching the economy, and eventually you start to raise unemployment, people start losing their jobs, there's layoffs, and people, the value of their 401ks have gone down. They are going to absolutely destroy you in the midterms if that's what you're left with. So Trump has a limited period of time to do this, which is why I think by Q4 would be my guess, you're going to see markets recover whether Trump has accomplished his policy goals or not.
Right. Basically, he has no choice because he wants to continue to be in office, and that is his end goal. Also,
when Trump stays in office, either way, right? But whether or not they have control over Congress is the big thing that gets determined in the midterms.
And if we look at the next like Q2, Q3, do you just think that we just sideways chop then, like just continue with this volatility throughout that period? And I also let me ask you that question first, and then I want to touch on some of the other economies, China and Europe.
Yeah. So I mean, to be clear, I'm not a macro expert. I'm not giving financial advice, but I think probably my base case, most likely outcome, is that yes, going until probably Q4, things are going to be range bound. We might go up, we might go down. Things are kind of going to jump around, but I don't think we're going to hit real escape velocity on risk assets until something fundamentally changes from this administration. Okay.
Let's. Do you have any thoughts on China, Europe, and them from the macro side? We don't need to talk about it if we can skip that.
I mean, it's clear what's going on in Europe is good in a way, like pushing them to care more about doing more deficit spending and basically being stimulative, where before they've actually been pretty, relatively austere. That's good for Europe, and it's going to stimulate the European economy, and it's also going to push Europe to decouple more from the U.S., which is bad for the U.S., but probably good for Europe and will likely be a boon to some of their economies. So getting real deficit spending there is good for them, and you can see it's happening in European stocks are doing well. So all of a sudden, Europe has signs of life, and we may have sort of inadvertently awakened them out of a slumber economically of making them realize that they kind of can't just sit around and do whatever. They have to get more aggressive with their government spending and being more stimulative. China is in a very, very difficult spot. So they're really struggling right now. Consumption domestically is pretty low. They're really dependent on trade. And their biggest trading partner, which is the US, right now is trying to turn the screws on them. And so they're already facing deflation, which means they have very low demand. And that's likely to get worse if you see that the market really potentially goes into recession. They already have very high youth unemployment. Things are rough in China. Real estate prices have been getting hit. So I think China has again, like Europe, they've held back on doing any kind of stimulus because they don't want to reinflate a bubble. They might have no choice to be forced to have to stimulate because of the fact that there's going to be such a shortfall in demand for Chinese goods. So I think one of the places where, clearly Trump can put a lot of pressure on Mexico. He can also put a lot of pressure on China. And China, like the things going significantly worse on China is going to make it very difficult for China to govern aggressively. And you can already see they've really turned a corner on their anti-corporate messaging. In the past, a couple of years ago, the whole story within China was common prosperity. All these big tech companies have to pay the piper in order to have the right to sell their goods and make so much money as they're making in the Chinese economy. That message is now reversed, right? Now suddenly Jack Ma is back in the room. He's being invited to things. All the CEOs are getting together and doing appearances with Xi Jinping. And what that signals is that Xi Jinping realizes that his economy is in trouble, and he's got to take business-friendly policies. So I think, Trump is really rattling the entire world, and it's America first, but everybody in the world has to react to what America does, just because we're such a juggernaut in the world stage.
Mm-hmm. And like you said, he has a limited time to do this, and so he's firing his bullets now while he still can, to try to make the most change he can. It does feel, though, like the markets have found a little bit of stability after a really rough period through end of February into the beginning of March, which is great to see. I want to touch on. I want to talk about a few different things. I want to talk about Ethereum, because you've had a lot of conversations recently about Ethereum. You talk a lot about that. I also want to touch on your heated debate with Mike Dudas at DAS, because that was definitely one of the highlights. I wasn't at DAS, but I saw that, and it was definitely seemed to be one of the highlights. Especially the room got quite heated. It seemed like not just you guys on stage. So we'll touch on that for those who haven't seen that. We'll talk about that. Let's just back up for a second, though, before we jump into these different, like Ethereum and meme coins and these different areas of crypto. What's your long-term thesis for how blockchains play out 5-10 years from now? Right now, we have hundreds of blockchains, and we have feels like a new blockchain, new L1 coming out every week. Feels like we have a lot of infra in the space. What's your thought into 5-10 years? You pick the time horizon. What is the future of blockchain look like in terms of how many blockchains do we have, and is there one controlling most of it? Are we going to have this modular or monolithic model? I know I'm asking a deep question, but if you could just give us a high level of your thoughts of the long-term thesis.
So high level, I think the answer is that it's probably going to look pretty similar to what we have today. I think the numbers will all be larger, but the idea is probably that this is going to follow a distribution much like Zipf's law. So Zipf's law is a power law distribution that describes a lot of natural phenomena, especially that arrive in markets. Actually, one very obvious example of Zipf's law is the size of cities. So I have this analogy that I give about how blockchains, layer ones, are like cities. And you can sort of think of, okay, Ethereum is kind of like New York City, super populous, but very congested, very expensive, hard to change, very antiquated. But a lot of people are starting these new cities, being these new L1s, because, okay, they're kind of greenfield, prices are lower, it's easier to build stuff. And so you can sort of see this dynamic playing out, which is that even though Ethereum has taken a back seat, it's not necessarily as dynamic anymore. The biggest, the new hot startups aren't necessarily launching on Ethereum, but Ethereum still has the most TVL, still has a huge number of users, and obviously it's distributed everywhere, right? So I think your mental model should be that this distribution, this Zipf's law-like distribution, will probably still be true in 5 to 10 years. Now, if you look at most of these other blockchains, the reality, of course, is that a lot of these blockchains are nominally, you look at them, you say, oh, look at this FTV, it's so high. This, why is there so much demand for this blockchain that nobody's using? I think it's a little bit of an illusion, because of the fact that a lot of these assets don't really have the liquidity that one might otherwise think they do, right? So you might look at this thing and say, oh, this is like a $2 billion blockchain. But if you actually go try to liquidate, $100 million of this thing, it would crater the price by 50, 60, 70%, right? Which tells you that actually, the liquidity, the price sensitivity of these assets is a lot less than it might appear at first glance. And this is just part of the crypto market structure that's important to understand, is that, it's not like a company where there's somebody in the background just doing a DCF and saying, oh, well, clearly this thing should be worth this. So if you're selling into me, I'll just acquire these shares because clearly you're selling them below the fair market value. There really isn't something like that for most blockchains. And so I think the sense that we have that, oh, wow, there's so much market cap sitting in alts, especially these alts that are far down the list, is a little bit of an illusion because they're much less liquid than they appear to be. So all that is to say, I think many people think that there's too much infrastructure, and too much infrastructure is getting funded by VCs, and there needs to be a massive shakeout. I think this is not really correct. Now, why is this not correct? So one, you can't really do a shakeout in crypto. Why can't you do a shakeout in crypto? You can't do a shakeout in crypto because layer ones or blockchains can't go bankrupt. Companies can go bankrupt, right? So there can be a shakeout of like, oh, there's too many self-driving car companies. A bunch of them will go under or get acquired. That in fact has happened. But self-driving car companies cost a lot of money to maintain. If you don't have a team and you don't have an office and you don't have, you're not paying the bills, then the self-driving car company will go to zero. It will disappear. Blockchains do not do that. There is no, there's a de minimis fixed cost or operating cost to running a blockchain. So even if the team basically folds or there's a skeleton crew that's still running this blockchain, it can still exist and it can still trade at whatever the marginal price somebody's willing to trade a token at. So that's one thing, is that you shouldn't expect blockchains to disappear. The second thing is that people think for the most part, it's like, well, it's kind of too late now to build a new layer one. Like, do we really need a new one? We already have, Ethereum and Base and Solana and Aptos, and like, why would we want more? We pretty much have figured out the constellation of these are the blockchains that are going to be valuable. And I think this is just obviously wrong. I mean, it's obviously wrong. Now, why is this obviously wrong? For one, the idea that, okay, we spent about, Ethereum was launched in 2015, right? It's been 10 years. We basically spent 10 years building blockchains, and then we were done. There were no more new blockchains to build. We did not need to make anything faster or smarter or have new technological breakthroughs, right? If you just think about technology, there is no technology that we worked on it for 10 years and we stopped. We said, we have the final form. We just take, Oracle servers from 2015, or we take GPUs from 2015, or we take, RAM sticks from 2015, and we say, this is good enough. A Sony Walkman from 2015. No, of course not. Every fucking technology that matters, you keep improving it, improving it, improving it. And sometimes you improve them in place, but sometimes you need a new generation, a fundamental shift in that technology in order to create the new, better version. Right? Like, we have this perception now that, like, wow, at this point, how could you possibly believe that anybody's going to unseat Solana, for example? I think this is just incredibly naive. Solana, 2 years ago, was a ghost town. There was nothing happening on Solana 2 years ago, right? Everything that has happened on Solana took place basically within the last 20 months. So the idea that clearly it's done. Now we have the final form of these are the blockchains that matter and nothing else is ever going to matter. I just think that's obviously wrong, right? The market is still incredibly dynamic and changing quickly. And if it changed that much in this period of time, what that tells you is that it's likely to continue changing. Now, how is it going to change? I don't know. And it's impossible to know ex ante. But it does mean that your prior should be that things change. New products, new chains, new technologies. They enable new things. They create new communities. They come up with new ideas. And probably this is not the final form that blockchains will take. Now, I think it's going to look similar to what it looks like now in 5 to 10 years, right? It's not going to be like, oh, it's total, everybody turned over and now there's a new top 10. In the same way that wasn't true 10 years ago either. 10 years ago, actually, we had Bitcoin and Ethereum and XRP and a lot of these names still in the top 10. So not everything will turn over, but a lot will. And I think as a VC, I'm acutely aware of that because this is what I study, is I notice the way in which this stuff has changed and the way in which people often underestimate. Well, so the saying goes, people often overestimate what can be done in 2 years, and they underestimate what can be done in 10 years.
Yeah, that saying is it could not be more true in crypto. And even as an investor, it is important to remember that saying because we are so short-sighted and so impatient, and our expectations can just totally take us down the wrong path. Okay, I want to shift gears to Ethereum, and then I want to get your thoughts on meme coins, good or bad, and kind of get into your debate that you had with Mike Dudas. Before we do, we just need to take a quick moment to hear from our sponsors who make this show possible. If you're only trading on centralized exchanges, you're not going to make it. The best traders know the alpha is on-chain. Founded by Coinbase alums, Definitive lets you trade any token on Solana, Base, and every major chain all on a single platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Get the best prices on every trade. Your order is routed instantly through every DEX and liquidity pool with up to 19 times lower fees compared to other platforms. Trusted by funds, DAOs, and the milkman himself, Definitive lets anyone trade like a pro. For Milk Road listeners, get 0 trading fees on your first 25,000 in trading volumes. Upgrade your on-chain trading at definitive.fi today. Today's episode is also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CS USDL. Don't hold basic stablecoins, earn yield, all without compromising security. Backed by real-world assets and institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. See why CS USDL is gaining traction at milkroad.com/Coinshift. All right, Haseeb. Ethereum has been the down bad. I mean, it's just had a rough 4-year period here. We were looking at the chart on Monday with Kyle, and just it's not an enjoyable chart to look at. What is Ethereum dead, or is Ethereum just becoming a non-consensus trade that might have asymmetric returns now?
So Ethereum is in a rough spot, and I think a lot of this comes from the fact that Ethereum has not had the dynamism that people once expected from this community. Ethereum, once upon a time, people thought like, well, Ethereum is just it's kind of baked into the bread of crypto. You can't not have Ethereum go up. You can't not have Ethereum do well when alts do well, because it's just, it's the granddaddy. And the reality is that I feel like a lot of the enthusiasm for Ethereum has waned, in large part, not just because of Solana. People, I think, try to attribute a little bit too much of it to Solana. I think a large part of the reason why Ethereum enthusiasm has waned is because of the rollup centric roadmap. So if you rewind the clock back to when the rollup centric roadmap was first proposed, originally the roadmap for Ethereum involved Ethereum launching sharding and going toward multi-shard execution. So it was going to look something more like what Near protocol looks today, where you have arbitrarily scalable, sort of segments of block space that are all working side by side with each other. And this was a very ambitious vision, right? This was like, hey, this is how Ethereum is going to scale to be able to support the world's demand for this chain. And basically what happened was that the Ethereum Foundation was so behind and so slow at actually being able to ship upgrades that Vitalik announced that we are going to be pivoting away from actually implementing this very ambitious roadmap toward what's now called the rollup-centric roadmap. And the rollup-centric roadmap is this idea that, look, Ethereum's too slow. We're not going to get there in time. The rollups are going to get there first. So let's try to scale through rollups instead of trying to scale Ethereum itself. And those rollups will sort of be like proxy scaling for Ethereum. This was the theory. And many people at the time were very excited by this theory. It sounded really great. It's like, oh, the rollups are going to be like your, essentially like your colonies. And they're going to help expand the interests of, the British Empire, in this case being Ethereum, and everyone's going to win. That was the original theory. I think what's happened is that theory has proven to be incorrect. It's proven to be a bad mental model of how the economics of rollups play out, which is that today we have a bunch of rollups. They have a lot of demand. Actually, Base is one of the most used blockchains in the world, which is an Ethereum rollup. But what you see is that Base is paying almost nothing to Ethereum. Now, before danksharding, before blobs started to get, before blobs were introduced onto Ethereum, actually the rollups were paying pretty significant fees to Ethereum. But with the advent of blobs, which are basically a separate data lane where you can post rollup data that's not priced the same way as any other data on the layer 1, those costs basically went to near zero. It's extremely cheap now to post stuff onto blob storage. And that means that the rollups are paying almost nothing to Ethereum. Now, in addition to that, you see two other trends. One is the rise of people defecting away from being rollups. So for example, Movement, which has been in the news recently, originally was going to be an Ethereum rollup, and they decided to not be an Ethereum rollup and to sort of become their own layer 1. And so you're seeing now some defections of things that were originally rollups that are no longer wanting to be rollups. And then second, you're seeing the rise of alt DA. So DA stands for data availability. It's basically when people are storing the data they need for the rollup directly on Ethereum. Platforms like Celestia and Avail are these alternative places where you can store your DA now, so you don't even have to pay Ethereum anything. Like now you have rollups that literally have no economic connection at all to Ethereum. And so I sort of analogize this to, this is like the British Empire But the colonies are breaking off. They're deciding, you know what, I don't want to pay taxes to you anymore. And also, you don't even have a military, so how are you going to enforce me to pay taxes? I'm just going to break away. I'm very far away from you, so you can't really do anything about it. Yeah, we're going to have our own government now. And now this was an important lesson for Ethereum to see, like, oh shit, colonialism doesn't really work, right? Like economically, we can't hold on to these things. Okay, so what did Ethereum do in response to this? The answer is nothing. Ethereum has done nothing in response to this. And basically, they've just continued on this trajectory of assuming that the roll-up-centric roadmap is the right choice. And now there are some mumblings of, oh, maybe we'll tax the roll-ups in some way, which is obviously absurd because you can't tax, there's no mechanism by which you can tax roll-ups. You can't force roll-ups unless they're so committed to settling DA on Ethereum that you just jack up the blob storage prices on them. But beyond that, you cannot force roll-ups to pay you higher fees. So what you have in essence is that the British Empire took on this colony first strategy, and this colony first strategy, this roll-up centric roadmap, fell apart. The roll-ups all defected. They're no longer paying tithings to Great Britain. And instead of Great Britain saying, oh shit, okay, time to wake up and pursue our own scaling strategy and understand and acknowledge the fact that the roll-up centric roadmap was a mistake and we have to move away from it and become a financial center in the way that Great Britain did. Ethereum has not done that. In fact, Ethereum has not acknowledged that any of this stuff was a mistake. And now, to be clear, it wasn't a foreseeable mistake. I don't think it was obvious, or you could have known at the time that this was how it was going to play out. But we certainly know now that this is how it's playing out. And so my sense is that if you saw from the Ethereum Foundation a real acknowledgement that this was a mistake, and we now need to pivot our economics in order to be able to scale Ethereum and capture more of the value that we have created, that the colonies are free riding on. Now that being said, it doesn't mean you have to fuck over the L2s. It doesn't mean that they're bad. They are still, they're allies now, right? So sort of like Commonwealth countries. You're nice to them. You guys share, legal structure, and maybe they're even piggybacking on your institutions a little bit. That's okay. It's not a problem that they exist, but it does mean that look, strong parents make for strong children, right? You got to take care of yourself first, Ethereum. You got to scale yourself first. And just because you scale yourself doesn't invalidate the rollups. You're never going to scale as much as having 20 rollups on top of you. But it is important for Ethereum to have an answer to how it's going to scale. If it remains being overly expensive, static, and never really changing, people are going to lose confidence. And that is the one risk that Ethereum does have, I think, of actually potentially losing the mantle over a long enough period of time. Now, I think what we see from the new Ethereum leadership, the new Ethereum Foundation leadership that's come in, the two co-executive directors, Xiaowei Wan, I think, and then Tomas Stanzak.
I'm glad you said his name, not mine.
I probably butcher the names, but
you're better than me.
I think they see that things need to change. I think there's a real mandate for change now from the EF, and so I think what we will see, and I'm actually quite bullish now, that Ethereum is going to be able to turn the corner. And a lot of that turning the corner is not even necessarily they're going to ship something this year that's going to change the narrative, but rather that they are going to change the message that's coming from the Ethereum Foundation. That no, we are not about, we're not just about giving grants for cryptography researchers or trying to elevate the global South and say, oh, how can we have more events in Southeast Asia? We want to highlight different parts of the Ethereum community. I think, look, that's fine. It's not that you shouldn't do that, but there's even more fundamental stuff, like the meat and potatoes of governing that you need to do, which is make sure that Ethereum has a strong economy. And that strong economy, the foundation of that is having strong economics and also, taking a page from Solana's playbook and making sure that you're encouraging capital formation within Ethereum, making sure that startups in Ethereum have support, right? You go to any other layer one, we work with a lot of founders, so we see this process firsthand. When they go to Base, they go to Solana, they go to Avalanche, they get offered incentives. They say, hey, we're going to partner with you. We're going to help you go to market. We're going to help you get introduced to investors. We're going to do our best to make you successful. The only ecosystem that does not do that is Ethereum. Mm-hmm. And why? And on a certain level, it's because they didn't have to. Well, they have to now. And I think the Ethereum Foundation realizes that.
Yeah, it's interesting that you say go to market because there's if you're launching on Base, you get so much support from Jesse Pollock, their whole team. All this noise is made, and then over on Solana, same thing with Super Team. All this noise is made, And on Ethereum, it's never been that. And now we have a go-to-market problem in crypto more so than a tech problem now, right? That's where founders need the most support, right? We're ready to go to market. We're ready for mass adoption, but it's difficult, right? It's not easy to go to market and to say, here's my product and hey, jump on. So you need support in that. And I think, I hope that Ethereum can do that as well. What will you be watching for that would make you continue to be bullish on Ethereum, or would make you sort of change your mind? What are maybe the red flags that you're a little bit worried about?
I mean, it's been less than a month since this changeover, so you want to give them some rope. You want to be patient, but you also want to be watching closely, because the few things that I expect to see, one is a change in messaging. If you're not seeing that in the near future, I think that would make me less positive that actually change can be done. I'd want to see what's happening with Etherealize. Etherealize is this new arm of the Ethereum Foundation that's more focused on institutional adoption. And the sense is that Etherealize, so you notice, in the crypto summit that took place in DC, there was no representative of Ethereum there. Right? A lot of other chains, a lot of other projects, a lot of other companies, but Ethereum wasn't in the room, right? And so Etherealize is meant to be that more institutional actor that can be in the room and be a party to those conversations now that politics is driving a lot of what's happening in the crypto industry. So what I'd want to see is Etherealize doing its job? Are they making Ethereum more of a force in some of these important conversations happening with institutions and happening within politics? And I think that's as much as you can hope for this year. And then lastly, of course, seeing entrepreneurs telling us that they're getting more support from the EF. If I see those three things, then I'm very bullish.
Mm-hmm. And so far, have you met with Ethereum's leadership or anybody at EF recently that it would
I've met
indicate?
I've met with Tomas and I got and a few other people at the EF, and I came away feeling very positive. Now that being said, it's still early. Certainly. It's like the first few weeks for them. I think technically the time I met him, he hadn't even formally started yet. So it's still a very big transition that needs to take place. And the EF is a very old institution. It's hard to change things that have been around for this long. But I think the mandate is there. And I think Vitalik is listening. He knows, he's been reading everything that people have been saying. He knows that Ethereum has a lot to lose here. And I think they're very sensitive that they need to get this right.
Mm-hmm. Mm-hmm. Okay, so let's shift from Ethereum to Solana. Solana is now feeling a very different negative vibe from meme coins. Basically, really, they're now being labeled as the meme coin chain. Meme coins have a very polarizing view in crypto. What's your thoughts on Solana, meme coins, and feel free to share some of the takeaways from the debate that you had with Mike Dudas. Maybe just give that story quickly. You and Mike Dudas, for those who don't know, Mike Dudas is another VC, and Haseeb and Mike had a great debate at DAS, which led to basically you guys asking the audience which sides they were on, and some people walked out, right?
Yeah, that's right. So we had a big debate, not necessarily about Solana itself, because of course meme coins are a multi-chain phenomenon, right? They're on Base, they're on BNB chain now, but Solana is probably the most indexed on meme coins in that it really comprises the majority of the economic energy that you see on Solana today. So I don't consider any of this to be an indictment against Solana, but I do think that the meme coin cycle, it feels like it's already on its last legs. Now, last legs can mean a lot in crypto because it takes a while for some of these things to die. So, but I think we've already crested, right? You can see, the first sign that a movement is ending is that there are no more true believers anymore. People are still doing it, sort of people still, kind of following the Catholic Church, but they don't really believe, right? They're sort of doing the rituals and they're sort of like, okay, but all the people who are professing financial nihilism, all these people who are saying like, oh, these VC coins, these tech coins, they're extractive, they're bullshit, like everything's a meme coin. Those people aren't saying that anymore, right? A lot of their rallying cries lost steam because of the fact that actually the quote unquote VC coins and tech coins are now outperforming the meme coins. The meme coins are down badly. A lot of these things are down 90% plus from the top. Whereas, altcoins, obviously they're not doing great since Trump's trade war, but they're doing a lot better than all the meme coin stuff. So now all that being said, it's important to also understand if you go look at Pump.Fund's volumes or revenues, they've fallen a lot from the peak, but they're still nowhere near where they were before this cycle started. Right, so it's kind of like I think if you pull up the chart, what you'll see on Dune is that Pump.Fund revenues are basically where they were last summer, Now, last summer was still the meme coin cycle. So things have crested, but they've not gone anywhere near zero. And you still see that there's a lot of speculation still happening, a lot of new meme coin launches, a lot of things still graduating. But the sense, I think, from many people in the market is that it doesn't feel the same anymore. After what happened with Libra, after what happened with Melania, after all the Kelsier Venture stuff, people kind of got a glimpse at how the sausage is actually made on meme coins. And they got to see all the grimy characters that are involved in sending this stuff to them. And it's kind of like, my sense a little bit is that it's kind of like we just did an expose on how processed foods are made. Mm-hmm. And everybody kind of got a little bit of like, well, yeah, it's just kind of gross to see it. And once you see it, it's like, you know what, maybe I should start eating healthier. Maybe look, I've been losing money on meme coins because of course we know that the median user loses money on meme coins. That's been true since the beginning. Right? I think it's something like 60% of users lose money on meme coins. And this was in the middle of the market boom. 60% of users were losing money. Right now, it's probably much more than that. So the reality, the median users are losing money. But why were they continuing to play? They were continuing to play because they believed the stuff that people were telling them. And what they were telling them is that meme coins are the game that favors retail. If you're a retail trader, like you can't win on all coins, VCs are dumping on you, all the markets are manipulated, all this stuff is fake, it's all gonna go to zero, except for meme coins. Meme coins are the one way you're gonna make money. And all these influencers were telling them that, and they believed it. Well, they don't believe it anymore. Or not nobody, but many, many fewer users believe it. And you can see it in the numbers, is that these numbers are coming down. Now the game is not over. And the game, the meme coin trading game, is a good game. It's very dynamic, it's fun, it's addictive, and I think a lot of people will continue to play it until the cycle really does end. But at the end of the day, if you're not making money, if you're not actually seeing things go vertical anymore, then the game loses a lot of its appeal. Because so much of what animated people towards meme coins was this idea that there are these crazy asymmetric returns. You buy one random low cap shitter, and maybe that thing is going to be the next, fart coin, and you're going to become, you're going to 100x your money. If that's not happening anymore, and there aren't people 100xing their money, which requires a steady stream of retail coming into this market. If that stream dies up and you're not seeing the 100x anymore, that's where I think this trend will ultimately start to capitulate. So the big meme coins, like Doge and things like this, they'll exist forever. I'm not talking about those things. I'm talking about the meme coin game, which is what Solana is, of course, very indexed on.
So if meme coins are cooked and if meme coins are over or never going to come back to what they were, what happens with Solana?
I think Solana, so I don't think Solana is going anywhere. I think it's going to remain to be one of the most important chains in crypto. Probably the MEV or the REV on Solana is going to decrease dramatically if you see meme coins really start to capitulate. But the reality is that there's a lot of non-meme coin activity happening on Solana now. And that's going to kind of become the backbone of what's going to drive Solana. So whether it's the DeFi, the consumer apps that are increasingly popular on Solana, that's going to be the real energy there. And Solana still is the winner among high performance chains. So if you want something that's super high performance, super low latency, Solana is right now the front runner by far. So it's on them to hold on to that. Every one of these speculative cycles in crypto, whether it's ICOs, whether it's NFTs, now meme coins, they eventually end. Now, that doesn't mean they go away entirely. None of these things have gone away entirely, right? They're still ICOs. They're still NFT mints, but they're much smaller than they were in the heyday of the market. The same thing will be true of meme coins. The meme coin game will never, there'll be some number of people who will always play the meme coin game basically forever because they just like it. They just, they remember it fondly from their 20s that this was the way that I initially made my bankroll and it was so much fun. It was the highlight of my life and they just keep doing it. And that's fine. It's totally normal for there to be a cohort of people who continue playing this game that the rest of the world moves on from. But Solana is going to have to diversify away from it, and I think Solana knows that. I don't think people are delusional about the fact that meme coins in their current manifestation will not continue forever.
So, okay, last question before we wrap here. When you look at the market right now, a lot of people are talking about this shift from meme coins or pumpamentals to fundamentals. Do you think that is what's the next big narrative that you think? And let's not touch on AI because I know that you have lots of thoughts on AI. We could do a whole other episode on that. So do you think that where do you think the next narrative is that comes? And I'm not talking about the next casino. I don't expect you to predict what the next NFTs or meme coins is.
The honest answer is I have no idea. I do think there's going to be a lot more energy around real world assets and tokenization and stablecoins. Those are probably going to be the really, really big stories as you start to see, much more stalwart institutions, GSIBs, global banks coming into the space and starting to do stuff alongside crypto on chain. I think that's going to drive a lot of excitement in the industry. But I've never been very good at predicting narratives, so take all of that with a grain of salt. What I tell people on our team and what I tell people generally about venture is that our job as VCs is actually not to predict the future, because nobody can predict the future. I've been in the space for a long time, and I know all the investors in the space. None of them knew how it was going to play out. Everybody had a guess,
even though they might say they do, right?
Even though they might say they do, I guarantee you, nobody got it right of how this industry was going to play out. But the things that great investors do well is not predict the future, but to notice the present. Right? Can you actually see what's really going on? Can you actually see, even when it's a small number of people doing this thing, this little community, whether it's us investing into DeFi in 2019, back when DeFi was tiny, it was $20, $30 million in TVL on these projects, and say, this little experiment here, I think this is going to be really big someday. That's the job of a VC. But predicting the future, I think, is a fool's errand. So I don't know what the next narrative is going to be. But I do know that whatever it is, it's probably already here. You just have to pay enough attention to see it.
Mm-hmm. And coming out of DAS, what I've heard is there was a lot of momentum for RWAs and stablecoins. Is that why you're feeling that could be the next big thing, that maybe not even big thing might be the wrong words, but the next thing that gets a lot of attention?
I think it's already happening, right? I mean, you can see it from all the institutional adoption. But if we see that macro is kind of choppy and things are kind of range bound for a while, what is really going to animate markets? The answer is, what's going to be the marginal change? If it's not retail investors coming back into the space because macro remains very mediocre, it's going to be institutional adoption. And that is the trend that's going to continue regardless of what's happening on the macro side.
Mm-hmm. Not to mention the setup in the legislation that's coming in the US at quite a rapid speed, I think faster than any of us really expected. I mean, we'll see. It hasn't come yet, but it seems like they are moving very quickly and really pushing, especially on the stablecoin legislation side with the Genius Act and others. Haseeb, absolute pleasure to get you on the show today. Thank you so much for your time. Greatly appreciate it.
Thanks for having me, man.
Thanks for listening in, everybody. Have a wicked awesome day. I have to remind you all, this should go without saying, but none of today's episode was financial advice. This was for entertainment and educational purposes only. If you are investing, you should only invest what you're prepared to lose. Investing is risky. Stay safe out there. Do your own research. Before I let you guys go, I got to tell you about one product in this space that I really love, and that is Salt Lending. This is for those who want to continue to hold on to your Bitcoin or your Ethereum long-term, but you want to start to get some sort of gains from that. Well, one of the best ways to do that is take a loan out against that. With Salt, you can take loans that are flexible to 12 months, 36 months, or 60 months with competitive interest rates. It's all on chain, it's all permissionless, and it only takes about 24 hours to get your loan, much quicker than you would in the TradFi world. Check it out at the link in the show notes. Thanks again for joining us today, all. Have a wicked awesome day. We'll see you back again tomorrow.